Hello and welcome back to Master Forex Academy. This is Master Pro, and today it's the 13th of March 2024, and we're going to be looking at the analysis of CADJPY. So now if you are to do this kind of analysis, as I always say, you need to do a top-down analysis so that you can see how this instrument is looking medium to long term. And then when you want to get an early entry, then you can go on a lower time frame and be able to get a sniper entry over them. So now I always use trend lines to check what is the dominant trend direction, and looking at where the trend started, as it is currently moving up. It started over here, and as you can see that it went up, it retraced, and it formulated a point over here. So this point and this point. Now if I connect this low and this higher low, I'll obviously note that the market has then created in a situation whereby it was supposed to touch here and then continue moving up on a third touch. And I see that the market did break that level and disappointed a lot of people, because as much as we are taught these double third touches, it is so that we can use them and lose using them. So every single time when you see a market movie, don't just say it's a first touch, second touch, third touch, you're going strong buying. You'd always want to get those confirmations, early confirmations in lower time frames, so that you can be able to see whether you should be able or not be able to enter at those levels. Always you need to ensure that you're always looking left on your chart to see what did the market do on the left hand side of the chart. So over here, as you can see, the market got to that area and then it found some sort of support, and then it found some sort of support. It was supposed to continue going up, but then it broke. So now breaking that level over there, it's still retracing and sitting strongly around this point. So now what am I seeing around this point? I'm seeing a doji, a doji, a doji. So about 3 dojis at that level, telling me that there's a strong indecision. There isn't enough momentum from sellers to continue pushing the market bearish. So now looking at where they're creating this liquid momentum, here there is a vacuum forming a very strong significant demand. If you can look at it over there, these two areas are now forming a strong demand around this area. This entire area now becomes a very strong buy zone, because sellers are failing to push momentum down. So now, as much as the market had broken that area, but sellers needed to sell immediately, pushing the market down. But immediately after the market breaks a dominant trend and there's no strong momentum selling, buyers may want to come back and then drive the market up. So now what you are seeing here, it's a significant support, meaning that we can start looking into executing some good buy trades around this area. So now the earliest entry for you to get a sniper entry would obviously would need to go to either an M15 chart or an M5 chart. If you are seeing here, there's a very significant support and around this demand area, starting to see buyers buying. And if you haven't taken this trade, you can still be able to buy above that price. So you can still be able to buy above price 109.310. Why that price? You look left on the chart. There has been some form of support previously on that price. Another support, and indecision. Then the market went up. So when the market returns to this price, we may face some rejection. If it gets rejected and then it pushes back down and breaks that demand zone, we may want to start selling over here. We may want to start selling below price 109.121. So if you start selling around that area, obviously your stop loss will be set around that price of 109.199, and boom, looking at where you can be able to set your TP looking at that area. So your TP can be set around 108.829, and another TP level as well that you may consider looking into. And the reason why I'm not looking into it is because it's too close to around that entry, but you can look into this price level because you see there was some form of a reversal and a bit of rejection previously on that area. So if you are to enter still around that 109.121 price area, then you may continue to say once the market reaches 109.036, you trail your stop loss, you bring it slightly below entry price. Then the market, as it breaks this price, then you can be able to add additional sell trades exactly around this point, add additional sell trades, and then use this price of 108.829 as your TP point, and then this price of 108.685 another TP point. So what I normally do in a setup like this, every single time the market breaks a level, for example, if the market comes through, it breaks this level and then trades beneath or it traces beneath it, I add an additional sell. The same thing, I trail my stop loss, I keep it trailing. Then as soon as we break that price level of 108.829, I do the same thing, add additional sell trades. Then I trail my current existing trades. Then again, last position around the price of 108.829, and then add additional trades with my TP over there. Now, as I already say, that the market is not a one-directional market, it's a two-dimensional market. If the market happens that it does not break this level, it actually finds support, you actually start buying around area. So I said that we're buying around the break of this price because I missed this entry, still asleep during this Asian session. So now it's pre-London session, pre-London market open. So now I'm anticipating a push and a break above that price of 109.310. If I get a retest above that price, definitely will be executing a buy. And then looking to set my SL slightly around this area over here, looking left. If the market gets to that price of 109.246, would look into setting my SL around that price. And then my take profit, will look into taking my take profit. Okay, here there was a gap down, so the market might get to that price and find a bit of reversals or sideways movement. So I want to set my TP around that price of 109.393. That would be my TP1, and then my final TP around that price area there, TP2. So if the market does go up and then it breaks the price of 109.393, then I'd want to execute another additional buy trades slightly above where it did a gap down, and then above that price would definitely want to start buying as and when the market moves going up. And before that, you can't just, for example, open the chart to see that the market is moving up, boom, you buy. No, you need to wait for the right time to buy. As I've shown you, the probable places where we can be able to get entries. If you miss a sniper entry, the next best thing that you need to get is a trade again on the next zone. So this is zone-to-zone trading or zonal trading, where you're looking into buying a significant demand or supply level. So this is a demand zone around there. At the top, there will be a supply level, and then as soon as the market breaks and retests above that area, then you look into executing another opportunity buying. And as I said to you, you can look at M15 and you can also look at M5. And so these are the two charts that you can use to get your sniper entries. And now deciding whether you should hold a trade medium to long term, you then use H1 and H4. These are the time frames that you'd be looking into. So now seeing an indecision doji on this H1 time frame, if it is followed by a smooth bullish close, it is showing a very strong momentum that buyers are getting back in control. And remember, this was a failed third touch, and if we are getting a momentum above it, then we can still see another level. For example, this level over here, it will still be a second touch. It's actually first touch, second touch, it would still formulate a third touch, meaning it can become a very strong dominant bullish buying momentum. So in order for you to hold this long term, you can always get your sniper entry on a lower time frame, and then you can put a test trade. Then as soon as we get a close above that price of 109.310, you add your additional trades around at 109.437, and every single time it breaks a level, you can keep adding your trades and continue moving like that. And as you can see over here, there was a great rejection around the price area, so you will look into ensuring that if it breaks that final price of 109.574, you want it to break that wick again before you continue adding any additional buy trades. So this is an analysis on CADJPY, and I am a Master Pro, mastering this chart. It's as easy as that. If you'd like to learn more on how to do this top-down analysis and how to do technical analysis, and get an in-depth insight on how I do this and how my students have been able to do this, just go to my website, and you will be able to get more information on how you can be able to sign up for my course or to even sign up for my signals. The link are in description and bio, and I'm gonna be catching you on the next video. This is a Master Forex Academy, MFA, baby.
From a milli to a billy, and I came from a village to a city, and I thinking that I finna be doing better. Gotta get the money like a cool trader. My plan